On the economy, housing and retail are slumping, but jobs and consumer confidence still staying strong. We'll discuss what all the data means for the nation's economic growth. That's at 4 p.m. Eastern. We're coming to you live outside the New York Stock Exchange on a summer Friday on Wall Street.
To the floor of the exchange, and we'll end out the week on a record. Hello, Melissa Lee.
Hello, Dylan Madigan.
Nice to see you.
Pretty good day considering it's a Friday in June. We had light volume, tight trading range, but we are sitting right now at what would be a closing high for the Dow and the S&P. And we saw strength really across the board because we saw strength in the Russell 2000 as well as the mid caps, the Dow Transports. All of these indices are also sitting pretty much at record highs. So breadth here to the strength.
Yeah, the test will be next week. Again, we survived this week on the back of all sorts of. There's all sorts of support. Again, whether it was earnings, the economic data today, next week it starts to get into the slim pickings out there for economic support or any data support. Where, if anywhere, will they look?
Whenever there's an opportunity where there's nothing to hang your hat on, that's when the markets really start getting a little bit worried. So we're probably going to watch interest rates very closely. We've seen interest rates tick higher this week. It's something that we've managed to overcome in this holiday shortened week. But next week, that might be where the markets really start focusing. That and also, it's funny, whenever we end earnings season, we start looking ahead to the next quarter. So analysts are going to start talking about, what's coming down the pike. And so that's what we're going to be looking at. Not to mention, we are going to see light volume next week, too. I mean, think about it. It is June right now. That's going to catch up with us at some point.
So, again, 5% will be the yield to watch next week. We'll see the bond market ticks things back through that number. And, again, you will start to hear conversation about second quarter earnings start to emerge on this floor and other trading floors. Bell rings June 1st. Mark the record books. The closing bell continues as Maria Bartiromo outside right here at the New York Stock Exchange.
We're at the heart of the financial capital of the world, where the temperature is hot outside in New York City. We're standing outside the exchange. Inside, stocks are continuing to sizzle. The bulls charging ahead, closing out a record setter of a week on Wall Street at another new historic high, 13,665 on the industrial average. Hi, everybody. I'm Maria Bartiromo, coming to you today live outside the New York Stock Exchange. We're going to start summer Fridays on Wall Street here on the closing bell. We hope you'll join us as well. Wall Street caps a week of broken records in uncharted territory. Stocks hitting new highs following a slew of better than expected readings on the U.S. economy, including the big one everybody was waiting for on jobs today. The Labor Department reporting non-farm payrolls were up by 157,000 in the month of May. That was slightly better than expectations. The unemployment rate, meanwhile, held steady at a level of 4.5%. Average hourly earnings were up. They were increasing by 0.3%. So, yes, they are rising, but not by that much. Take a look at where we're ending today's trading session. It's a hot Friday on Wall Street, and the markets are certainly hot. The Dow Jones Industrial Average tonight on the upside at a new high. The biggest driver today was Walmart. That stock was doing very well, and the industrial average, as a result, up 40 points. That's 1/3%, finishing the day and the week and the month at 13,668. June 1st, up 40 points on the industrial average. Rallying better than 4% on Walmart, meanwhile. That was one of the key stocks within the average. The company planning a $15 billion buyback and announcing other initiatives to improve sales at its annual meeting. Details on that meeting, what went down, and how you can profit on Walmart coming up. Meanwhile, take a look at the S&P 500. Record shattered here as well. The Standard & Poor's up 1/3%. That was 5 points higher to finish the day and the week at 1536. Pardon me. Nasdaq Composite at a 6.5-year high. Take a look at the Nasdaq. Technology certainly one of the movers today, up 9.5 points on the composite. That's 1/3%. Even though Treasury yields were at 9.5-month highs today, 26.13 on the Nasdaq. Stocks also brushing off the increase in oil prices. Crude futures today up more than $1 earlier today on renewed concerns about gasoline inventories. Crude finished below $65 a barrel, but it did cross 65 earlier. We have all the market action covered for you, and we continue to look at how you can ride this rally. CNBC's Melissa Lee and Rick Santelli are with me, along with Morgan Stanley's David Doris. We kick it off at the big board with Melissa.
Hi there, Maria, and as you said, at record closing highs for the Dow as well as the S&P. You would not have known it was a holiday shortened week, in fact, because it has been the best week for the S&P since the end of April, the best week for the Dow since the week ending May 18th. And in fact, the Dow and the S&P have been up for 8 of the last 9 weeks. We also saw strength in the small caps and the mid caps, as well as the transports. And among the groups helping the Dow charge to new records today, oil stocks as well as gold. And take a look at these retailers on fire in today's session. J. Crew up sharply on the back of better than expected profit growth, also projecting EPS growth in excess of 20%. Circuit City analysts getting very positive about its plans to eliminate some of the top managers across of its supercenters. Nice gain there. And Macy's, that's owned by Federated, right? Well, Federated changed its name to Macy's, assuming the ticker symbol of M in today's session. Also, take a look at some of the stocks rising on the back of buyback announcements. Maria had mentioned Walmart. That was a big gainer for the Dow, second most actively traded stock on the trading session today. Brinker International also boosting its buyback, seeing a nice stock boost in today's session. And Burger King announcing a buyback of $100 million, getting a nice boost from that. And quickly take a look at Morgan Stanley intraday pop here after it announces finally and officially in a filing that it will spin off its Discover card unit in June. So that filing crosses, and we do see a pop in Morgan Stanley stock. Maria, very good day for the markets. Record setting, in fact. Back to you.
All right, thanks so much, Melissa. And the raft of better than expected economic data essentially dashing hopes for a Federal Reserve interest rate cut anytime soon. Treasury yields hit their highest levels in more than 9 months today. This is the one issue a lot of people are watching to see if, in fact, this incredible vibrancy turns around. Here's some economic data for you. Personal income fell, but spending rose, better than expected, 0.5% in the month of April. Here's what traders were most excited about. Take a look at the core consumer price inflation. It was up, but just by 0.1%, which means that year over year, core inflation is running at just 2%, which is within the Federal Reserve's acceptable range. That certainly has been a positive for the markets. Meanwhile, the ISM index, that's the manufacturing index, it rose to a level of 55, while pending home sales fell 3.2% in the month of April. Rick Santelli is with me in Chicago. He's at the Chicago Mercantile Exchange with the reaction from the bond market. Rick, take it away.
Well, you said it all, Maria, and we've been talking about it every day. A couple of basis points, a couple of basis points. All of a sudden, you're up from 450 in March to almost 5%. Look at a one-month chart of 10s. The recent rate of change of higher rates is obvious. And when you look at a one-year chart, you know, what really is interesting here is you pointed it out. Whether you're looking at personal consumption expenditures or any of the other quasi-inflation measurements, average hourly earnings, they look like the Fed had it right. They're moderating, but rates are still going up. Remember, the economic story is improving in the U.S. It's pretty good overseas. Overseas rates are at 3.5-year highs for similar 10-year maturities. Well, look at a one-year chart as we pointed, and you can see for yourself. What does it mean? It means that next week isn't a lot of data, but the equity markets always have a hard time with higher rates, and this one comes at a time where inflation even seems to be moderating. Lately, it's all about growth, more so overseas, but we're joining in the party. Maria, back to you.
All right, and it is a party for sure. Thanks so much, Rick. Stocks continuing to muscle ahead, and while my next guest is betting that the rally will continue, he's also warning that there are some worries on the horizon. Joining me here outside the New York Stock Exchange on Wall Street is David Darst. He's Chief Investment Strategist with Morgan Stanley Global Wealth Management. It is always great to see you, David.
Maria, it's great to be here, and I'm very thrilled and honored to be here on the inaugural presentation from the steps of the Federal Hall National Memorial. This is where George Washington took the first oath of office. So I'm very happy, and I'm sure he's smiling and blessing your efforts and our efforts.
I'm glad you're here. Let's talk about making money in this market. How do I ride the rally?
Well, we think
Barry Thompson is in Texas.
Maria, I'm here in Sabine Pass, and coming up, what I'm going to do is take you offshore to get an inside look at what one oil drilling company is doing to make sure that its business is sheltered from the storms. I'll have that coming up on the closing bell.
Don't worry, Maria, don't worry about it.
All right, Mary, thanks so much. And then this year's batch of college grads going out into the best job market in years. Whether you're a new MBA or a seasoned CEO, see which industries have the most jobs and the highest salaries. But first, take a look at the biggest percentage gainers and losers at the New York Stock Exchange. You're watching the closing bell as we come to you on a summer Friday from Wall Street.
You're watching Closing Bell on CNBC, America's business channel.